Alright guys, I thought I'd share with you a little setup. There's quite a few setups on the radar for this week, coming out of last week's crazy kind of anticipation and dribbling markets. There's been a couple of opportunities that we're looking at this morning, and I thought I'd share with you one on the euro dollar. So we're going to take a look at a couple of charts here, and I'm going to explain what we're looking at and how you may be able to take this trade. If any of you guys are wondering who the guy is out there with a lawnmower, that's my gardener. I tried to teach him how to trade, but he just couldn't get it. So let's get stuck in. So the screen we're looking at is TradingView. For those of you interested in this platform, and I'm using TradingView for this example because I just gave this example to some of my live room members where we took the trade in the live room. So first things first, what I'll mention about the euro dollar is it really does respect what we call structure consolidation zones. And what I mean by that is it goes into periods of consolidation where it really respects certain support and resistance levels for a period of time before continuing with a trend. So unlike most consolidation on other markets where you've got kind of sporadic violations of highs and lows and it's kind of a range, with the euro dollar you get some really nice structure consolidation where the same resistance and support levels are tested time and time again. And that's what we've been doing a couple of times over the last over this year with the euro dollar. So the first one was this zone here, which was really throughout the summer, start of the lockdown period in the UK to the end of or kind of the start of September, mid-September. And then we've got another zone right here, which is our most recent zone, where you can see, that we've got really nice support level here, and we've got that same level of resistance being tested again at the moment. So with that being said, the wise way to trade this would be if you trade consolidation patterns like ratio patterns, or if you trade off of the support and resistance zones. Now, if you manage to get in off of that most recent resistance zone, that's great. But if you're expecting a move to push right down to this lower level of support again, which, to be honest, there's a high probability that that will happen just because of the way that this market moves. The question becomes, how can we get involved now? Well, as you can see down here, we've had this is the 4-hour time frame. We had this strong bearish momentum candle on the 4-hour, and as we broke down to the hourly, you can start to see that we respected this. You could call this a head and shoulders, but we respected this neckline or this previous structure level where we had this compression channel looking left. So we kind of had this. I'm drawing this really rough, by the way, because I'm using TradingView and a trackpad. But we had this compression channel. We held that level after putting in that bearish momentum. But then what we did is we set up for this nice flag pattern. Okay, so there's a flag pattern here setting up this morning. And this is what we call a bearish flag pattern, a bearish breakout flag pattern to the downside. So as we see, we were bounced off this level, but we were kind of not at the top. But how can we carry on? How can we get involved with the remainder of the move down to the support level? Well, the next entry would be in the form of this breakout pattern. Now, if you trade breakout patterns, there's a couple of ways that you can do it. One would be to trade a flagpole extension. So you'd be looking at cloning the flagpole. Okay, so clone. Let's just bring in this and put it down at the low. The other way would be structure, or you might do a combination of the two. So look, we've got this structure consolidation. We've got this structure resistance level looking left right here. Which I would be looking at because structure is the primary kind of indicator for all of my trading. But we can use indicators for confluence and confirmation. So another way would to be bring on a Fib extension, so a trend-based Fibonacci extension ratio tool, and go from the impulse leg high to low, and you're going to see there's a 127 down there as well. So you can start kind of building out a nice zone for high probability target taking. A lot of people, they put a lot of attention and effort into figuring out the optimal place to get into a trade. They put very little attention and effort and analysis into where to take profits, and it's exactly the same thing. Any order that you're placing, you need to put the same amount of focus into where you're getting in as you do where your stop loss goes, where your target orders go. It's just as important. So right here you can see we've got a number of options. Now you might put your entire position, you might take off half of your position size at one level and the remainder of your position size at the other level, and you might trail stops, you might do something like that. What we did is we took an ATR stop above the highest high of the flag channel, which was at the time, it was about 30, I think it was 35 pips or so. So we got our stop loss up here at 1865, and then we entered at the top of this channel. Okay, so we had a retest. We entered here, as you can see, at 1839, and targets are just above this recent structure level. So just above the recent structure level, allowing for front running, spread, broker commissions. We just want to front run our orders to ensure the fill, basically. And that's where we're at. So you can see now, if we zoom in, this trade is still on, so it's not a hindsight trade or anything. Just thought I'd share it with you. But we've broken out of that channel. Okay, so we've got the breakout of the channel, and hopefully we'll see the price action push down and take our order out. We're already at 70 pips, so hopefully we can push down and get to our targets. So thought I'd share that with you guys. If you've got any questions about this, let me know, and I'll see you in the next one.